Welcome to Leaders of Tomorrow. I have a very special guest with me. I have Sundeep Sikka. Sundeep, thank you so much for joining us. It's a pleasure having you on the show. I hope you are safe and sound. And now we are hopefully almost at the fag end of pandemic. But you and the company both have come out almost unscathed from it.
Thanks, Mihir. Thanks for having me.
What has surprised me and a lot of people is actually the pace of recovery because that has also been unexpected. Did you expect this kind of recovery? I would say, at a macro level or a fundamental economic level, not the markets.
No, I think let me be very honest with you. I think these kind of events can never be foreseen, and it's always better to be cautious. I don't want to make it sound that I think we predicted things will turn around so fast. I think especially in a business like ours, we are managing public money in fiduciary capacity. One has to be very cautious. I think we've been taking our baby steps to see, understand, and get a pulse of how fast the recovery will happen. I mean, to the extent my leadership team, myself, the investment team, we've been ourselves visiting malls, automobile showrooms to get a pulse of how things are, how investors are behaving, how consumers are behaving. And it really surprises me. I think the human nature, how fast people adjust to changes. I think we saw a period of lockdown where all of a sudden, mid of March, the whole country was closed. Our offices were closed. We had to work from home, and we adjusted to that also. And now that things have opened up, I think if you were to go to any mall, you were to check up in any restaurant, I think they are packed. So I think that's the beauty of human nature. We adjust to things very fast. But again, to answer your question, on 25th of March, I think when Nifty hit all-time low for the year, did we expect the bounce back to be so strong? Answer is no. Did we expect India will respond so positively? I think as we talk today, answer is no. But I'm very happy things have changed very fast.
Right. Sandeep, before we get on with the discussion, this year has been, I would say, very interesting for you also because one is, like you rightly said, the country and the world went through something which was unexpected. At the same time, you had your own, I would say, journey in last 1 year because there's a management change and there's new strategy, and obviously you have to now we are in the market which is booming like never before. So, what is your key takeaway, and how did this transition at a management level happen? I mean, go through.
But I think you're very right. I think for us, this year was really one was the key. What happened with COVID for the whole country and whole world was different. But for us, I think we also went through a change as a brand name change. I think we
Yeah.
rechristened ourselves as Nippon India Mutual Fund. So effective, just to take you to the a little background, Nippon acquired 26% stake in way back in 2012 and gradually kept
Yeah.
increasing. And in October 2019 18 was the time when Nippon took the stake all the way up to 75, which is the maximum it can do in a listed company. From our
Hmm.
perspective, I think while two things happened, I think the word that you use, management change, it's a very interesting. For the outside world, it was a management change. I mean, the new shareholder, one shareholder became the majority shareholder. But from day-to-day running of the company, it is the same management team which continues. For me, I am in my 18th year in the company. And effectively, and most of my leadership team is also almost around the same period, 10 to 15 years. So we continue. So it's the good thing has been the new brand has been very well accepted by the investors.
Hmm.
We have seen more than 600 new corporate investors started investing. A lot of public sector banks, MNCs, which were not investing over the last 2 to 3 years, have started investing. And the proof of the pudding lies in the fact that during this lockdown, we have the year before this 18-19, we saw a net reduction in number of investors. We lost about 2 lakh investors. This financial year, while I've been in these 10 months, we've been in lockdown majority of the period. We have seen adding about 5 lakh new investors in ETF, new SIPs getting added. So overall, it's a very positive. And I think I remain, very bullish, both on the Indian economy, the bounce back out of COVID, and the company in the new avatar. I think what we want to reposition ourselves, not only in India, most of the asset management companies are perceived to be only mutual funds. For us, We
Hmm.
are repositioning ourselves as a complete asset management company, mutual funds. We are the largest player in ETFs. We have launched a private equity fund, technology fund, and a lot of offshore initiatives that are being taken. So at this point of time, so this year has been a very important year for us, laying the foundation for future.
Right. Sandeep, also, from your company's point of view also, because you are one of the few listed players, this space is growing. There are more and more people, at least convinced psychologically to look at this as a very serious kind of investment option, moving away from traditional investment instruments and all. What is your outlook for the industry, for the AMCs, the mutual fund, especially in the kind of market where we are?
Well, you're very right. I think the growth of this industry, I think, and the outlook both remain very positive. I think it's not only from the industry point of view, but also from a country point of view. This industry is going to play a very important role in converting the household savings into capital markets. I think, if you were to step back a little, I've been in the industry for nearly about little more than 2 decades. I think what we have seen is one big shift that has changed, that's happening in India. Earlier, we had higher interest rates. When the interest rates are high, people prefer hard assets, where the real estate, gold, and I think that trend is changing. I think
Hmm.
post demonetization, we have seen with the interest rates coming down, effectively more and more investors are coming into mutual funds. And also, along with that, earlier, majority of the Indians confuse the difference between savings and investments. So what happens is
Right.
money kept in the bank, fixed deposit. Earlier, 10 years back, a fixed deposit could give you 9 to 10%. But now, today, if you look at the larger top two private sector banks and the public sector banks, the FD rate is 5.5%. So, I mean, there is no incentive for investors to continue that money there. So, we clearly see a lot of shift happening, and also the education and the acceptability. Yesterday, my driver told me that first time, sir, I've invested in a SIP, 600 rupees. So now it's going down to the masses. I think so. I think I personally believe these are very interesting times. But I want to also highlight the fact, while the outlook is very very positive, but I think we need to also be ready. The consumer behavior is changing very fast. We have seen a lot of shift towards ETFs also. We way back in 2016 had acquired Benchmark and
Yeah.
Goldman Sachs operations in India. Today we are, if we remove the EPFO allocations, we are the market leaders, and that's 78% of the volume on the stock exchange. And that shift is also happening very fast. So I think so. The outlook is very positive. At the same time, I will say it is not that what worked in past will work in future. It's going to be very important, like markets. The future
Yeah.
leaders could be very different. Similarly, could be the asset management also.
Right. But ETFs are here to stay and grow. Trend we are observing.
Very convinced. I think many times we try to believe that I think a certain thing has worked in US, other parts of the world it will not work in India because we are here to create alpha. We can create alpha better than anybody else. I think the point here is I think what we have to understand is we are asset management companies. We have to we have to deliver what the investor wants. If the investor wants an ETF and is willing to look at a low cost product and is not willing not to pay high cost but wants basically index returns, I think we have to provide that. So from our perspective, let me give you a number. Indian asset management industry is almost where it was in US in way back in mid 90s, about $350 billion.
Hmm.
uh, and at that time ETFs were not in US, and it just took 10 years.
Hmm.
ETFs became bigger than the mutual fund industry. So I don't see will it happen at the same speed in India. I do not know. Directionally, the same thing will happen in India for sure. So from our perspective, we that's the reason I think we are one of the few asset management companies in India where we have a 25-year track record in active, we have a 20-year track record in ETFs and passive. So we believe I think both of them will coexist, and I think we believe that I think it's the investor, let the investor choose what is good for him rather than we pushing what is good for our P&L.
Right. Sandeep, now a macro question. We have seen, at least a genuine recovery. We have seen government take a lot of steps. What has happened is there are some entrepreneurs who obviously did well, managed the COVID scenario well. At the same time, there were some small and medium enterprises who suffered a lot, and maybe they are still not out of the woods. But the scenario in which we are right now, your borrowing cost has never been so low. if you are a good company, you have an opportunity to go out and raise money the way you want. What would be your suggestion to those entrepreneurs who might have suffered some setback but survived? Now, what they should be doing?
Amir, I think I've always believed whether it's an entrepreneur, irrespective of industry,
Hmm.
or it's a professional, three things remain very critical. Um, COVID, no COVID, there will always be some black swan event that will come up, which will disrupt the business model. Now, the key is how adaptable you are to change. Again,
Hmm.
and I'm going to give you practical examples of how in the asset management industry we did it, so that it can, for those entrepreneurs also it can. Uh, Today we have always relied on the biggest strength was distribution, having 300 branches, and mid March, none of the branches could open. And the fact
Right.
remains, I mentioned earlier to you, we have added highest number of investors, but at the back end, we were also ready with our digital infrastructure. And wherein today for the last year, we did about 50% of our new transactions were digital. So I think you need to always be prepared for the worst. Number one. Number two is going to be, while the no matter, I mean, it's about, it can be a great strategy, but ultimately it's all about execution. One common theme that we have seen, whether in listed companies or in the SME or as a professional, uh, we can have a great strategy, we can have great vision, but ultimately it's execution. If you were to look at some of the best uh, unicorns in India, the startups which are there, or whether it would be some of the best companies in the listed space, majority of them do not do anything exotic. They are doing the same old boring
Yeah.
stuff. Somebody's making a pizza, somebody's having a restaurant, somebody's having various things. You know what I'm trying to say? It's the most simple stuff that you're doing. But what the different is, the execution holds the key, and the B is also
Yeah.
going to be, you have to keep responding to the dynamic changes. And my earlier example that I gave you of ETF versus active, uh, active might be very good for my PNL, but if investor feels ETF is good for him, you have to give it to him. So my advice will be, there is nothing more important than execution, execution, and execution. And always be try to be under leveraged. Leverage is one thing. It's always good to it gives a feeling. I mean, I want to keep maximum equity with me, but I think I do. But the reality is, try to reduce your leverage. I think we have seen in the last few years some of the AAA companies also which moved to D. I think amongst all other factors, the biggest factor was they were over leveraged. So execution,
Hmm.
quality of management, and being flexible, responding to the market environment and the consumer. I think that is again very important. These are the few advices that I like to give to all these entrepreneurs.
Sandeep, you are sort of a master when it comes to gauging the pulse of the nation from investment point of view, or I would say the investor's pulse. And like you only mentioned that you have been visiting various retail spaces and all. At the same time, there is a lot of I would say optimism on the Dalal Street as well. In terms of the market performance and the return expectations have really gone up, and people have almost started believing that you can't go wrong. Are you slightly worried with this trend right now? While it augurs very well for the mutual fund industry or the overall capital markets, what is your sense?
Amir, that's a very good question. And being in these capital markets for so long just teaches you one thing: how do you control your emotions?
Yeah.
Both ways, when the markets are going up and markets are coming down. So let me give you an example. During these last 15 days, I would have got two extreme calls from my friends or relatives. One set of people would be, I mean, markets have run up so much. अब पैसा निकाल लें, should we, I mean, sit in cash, कभी we'll enter later. And the second set of investors will be the other extreme, who will say, things are going so well, should I put in more money? And my advice to both of them is that your thinking is wrong. I think you cannot be, your investment approach cannot be dependent on what is happening at that moment. It has to be basis a plan. And I think one thing that we have, all of us have learned, it's all about being how long you're in the market. The longer you stay, everything gets evened out. So I
Hmm.
think I would say one positive thing, especially this time when the markets are run up. I've seen the maturity of investors. They have not rushed uh, uh, to redeem, or neither have they rushed to invest, which is a very, very positive sign. The fact that in the mutual fund industry, on one side, you're seeing outflow, which continues. When I take it, the HNIs, the institutional investors will keep redeeming, because a lot of this savvy investors also came when the Nifty was 8,000.
Yeah.
But the number of SIPs continue increasing. The number of investors in the industry, in spite of the fact that this was a year of lockdown, we have seen COVID, so much volatility. Even during this year, since March, the number of investors are at an all-time high. We are almost touching now 10 crore investors. So I think the investors are maturing, but it's very important to control the emotions. And let me not make it easy. It is not only for the investors, even for professional portfolio managers. Many times you have to control your emotions, because it's the feeling of left out. Many times can make you do take a lot of wrong decisions. So you have to control your emotions.
That's true. The other part is obviously it is partially also because of the huge, I would say, a glut of liquidity that is flowing across the globe, and we are obviously a very large beneficiary of that. But are you worried about that part somewhere? Because end of the day, it can start drying up quickly before we realize, and that has played a major part in the kind of run up that we have seen.
Yeah, Mir, you're right. I mean, I think, the bull run that we are seeing in emerging markets,
Mm.
amongst all the positives, one of the direct reasons this has to be attributed to the liquidity that is being driven. I think, should we be worried? I think I would use the word we should be watchful. Because
Okay.
ultimately, any liquidity, any rally which is driven by liquidity, one needs to be watchful. So let's look at the environment. I mean, at this point of time, the way we see is that I think US will continue low interest rates. I think they will not be in a hurry to increase it, and one needs to be watchful of what is happening in US. Similarly, with the interest rates being low in US, all the asset management companies in and the asset allocators in US will continue looking at investing in emerging markets, and within emerging markets, India is emerging to be much stronger. So I think that's why I use the word. I will not use the word worried. It's watchful is the word. But do not expect in a hurry US to increase the interest rates. But if that was to happen, I can tell you this party will get over.
Now, coming back to the big event that we are heading into, the budget, people have already started calling it the biggest and the most critical budget in the last 100 years. We have heard that from government voices as well. Uh, do you really expect some sort of major, fireworks or major, I would say, show of strength and intent on the side of the government, on the part of the government in this budget?
Merit always I get worried when you use the word fireworks, best in 100 years. This is where and the expectations go up. I think one good thing has been, if we look at the last 5 7 years, budget for all practical purposes is becoming a non-event. And now why I use the word non-event, earlier all announcements 15 20 years back, all announcements used to happen on this day. Uh,
Mm.
Unlike in past, I think announcements keep happening throughout the year. But however, budget is remains a very important day in the history of the country because it gives a directional approach. So for me, I think I would clearly seeing the environment where we are in. It's an opportunity where we can really go both ways. We can go up or go down. Depends. So for me, the intent and the execution will hold the key rather than just the announcements. For us, I think some of the things that we are looking, I'm not going to get into the nitty gritty of the policies, but is going to be, I think, clearly from our perspective, we expect there are some soaps which come from the real estate sector. Clearly, one, I think we saw Maharashtra government reduce the stamp duty, and clearly we also saw the positive results. Real estate plays a
Mm.
very, very big role for the economy. It's not just about selling houses, offices, and flats. I think with that you have paints, tiles, fan, TV, everything. So I think I really hope that we see some action there. The other one I think is basically on the manufacturing side where we have the PLI schemes. Clearly, we have seen some positives. The fact that we have seen today the shifting of the largest manufacturing of Samsung, of iPhones and automobile, we were always we were strong. I think clearly, I think manufacturing is one thing we need because from a post-COVID, we have also seen a lot of job losses. It's the manufacturing also creates a lot of employment. Third, I think from our point of view, will be investment in the infrastructure, and I'll use the word both soft and hard infrastructure. Soft
Mm.
is going to be education. uh, and health. And on the hard, I'll use the word, both transport and telecom. These are again something, which are going to be the pivot, for us to go to the next level of growth. And lastly, I think a little being biased towards our own industry, I think it's very important. Government should come up with some software, because we need more capital for infrastructure building, and that equity has to come from outside capital. While on one side we are talking of DFI getting created, which is also positive, because a lot of these DFIs got converted into banks, and the ALM does not allow them to invest for 20, 30-year projects. But on one side, while we expect, and that is again, we hope it comes with the intent and good execution capability. But the other side also, the how household savings and the domestic institutions, I think what we should do is we should encourage more savings coming to the capital markets. And one thing that you earlier talked about, the SMEs and entrepreneurs, we should, I think India has some of the best entrepreneur capability in the world. I think what we should do is life insurance companies, asset management companies, and other, we should allow this flow of capital even into the startups. And I think we should come for some soaps for startups, because it's very critical. I mean, ultimately, uh, the growth of the country. I mean, today when you're looking at all the top 50 companies in the world, I think they were not existing. Many of them were not existing 20 years back. Some of them were not existing 10 years back.
Correct.
So I think now we need to encourage this kind of entrepreneurship, and this capital flow should go from domestic institutional players. We see a lot of foreign pension funds, global SWFs investing in the startups in India, but we do not have the formal flow of money from mutual funds domestic, while we ourselves have a small AIF, Indo-Japanese startup fund. But I think we should make this capital available for entrepreneurs. So these are some of the things that I believe are critical for a holistic growth of the country. And I'm very positive. I think post 2014, post Prime Minister Modi being a power, I think we have seen a different India. And I think this moment is, as you mentioned, is going to be defining for us to move towards the top three economies in the world, which is anyway bound to happen. I mean, the question is how fast we can make it happen.
Absolutely. One last question to you, Sandeep. This show, Leaders of Tomorrow, obviously is followed by entrepreneurs as well as people who are just about to enter the business or just about to enter the professional careers. What would be your advice to them? Because we are at the beginning of a new decade, and in all probability, this decade is going to decide the destiny not of individuals but of the country as well. And we need to get our act together and get it right. What would be your advice to people?
Well, I think for me, three things remain the most important uh, for any entrepreneur or professional. What we plan, it may or may not go as the way we see it. But to be agile, to be adaptable, and to be responsive. These are the three things which are must for us to succeed. And the other thing, I think my advice to especially the young upcoming entrepreneurs and professionals will be, today we're in a world where speed matters a lot. Everything is about speed. I think, and my message will be speed is good, but overspeeding can be risky. So I think so it's good. I think to have a strong foundation is important, but don't speed too fast. I think because that's where most accidents happen.
Great, Sandeep. Thank you so much joining us, and I hope to see you on the other side of the budget. We'll catch up and stay safe and take care. Thank you so much, Sandeep.